This is going to be a punchy one. I wanted to pick a name for the keynote that is an epitome of a large transformational event in capital markets. And I think Bitcoin is the next revolution. So let's look back at history. I want to focus on three specific transformations. First, high yield. There was even legislation proposed in the Senate to prevent leverage companies to obtain financing. Now, obviously, through Milken himself, we have a large multi-trillion-dollar market. What was innovation? The ability to see beyond, to price risk. What is the default risk? And then open capital markets to a completely unbanked part of the world. Securitization, another innovation. What does securitization do? It bundled small illiquid assets into a tradable security and allocated risk based on risk tranching and layers. That obviously revolutionized mortgages, and it was well before the dates that I have in there, but really took off when we started to apply that technology to many types of assets. And more recently, it's been in the news a lot about this idea of private credit. It's very heterogeneous, but what is innovation in private credit? It's really taking credit outside of the banking system and creating a wrapper to provide a service to a number of borrowers. Middle market, trade finance, there's various areas where it's even regulation or service that can enable more lending to be had to those markets. So I think Bitcoin is next. It's going to have a transformational part to all parts of credit. So where are we today with generally credit? Rates are higher. We had a 40-year bull run in bonds. You didn't have to do that much over the last 40 years up until 2020 to generate really good returns in credit because you had this massive tailwind of lower and lower interest rates. So the boat kept lifting. Spreads were okay. There were points in time where they were tight, but particularly right now, they are tight. We're not as tight as pre-GFC, but spreads, meaning credit spreads, are relatively tight, meaning the additional compensation to go into credit is low. So those are structural headwinds. What do we do about it? Well, what do typically people do? They go and look for opportunities to generate higher yield. How do you do that? Well, you focus on weaker underwriting. 5 years ago, maybe that company didn't pass muster. Now we need to generate higher yield, so we'll accept it. A lot of that has been in the headlines as of late. Also, maybe you do another turn of leverage. The banks are now have more appetite. Why don't we put another turn of leverage and generate the same amount of yield, but significantly more risk? So this has been what has happened over the last 5, 10, 15 years. It'll continue to happen up until there's a big point of discontinuity. So how does this play into Bitcoin? Well, all the tools that I spoke about and all the different markets get exhausted. They get basically priced to perfection. We need to introduce a new tool. For me, that new tool is Bitcoin. Think really big picture. Bitcoin as an asset, Bitcoin as a currency. Can we start introducing it into different areas? And if you start looking from a credit metric perspective, it's actually a really good darn asset. It's liquid. It's one of the most liquid assets in the world. It's not about stocks or US treasuries. Sure, they can be liquid, but this asset is 24/7 liquid in all markets and is really fungible. Bitcoin here, Bitcoin there, it's the same Bitcoin. That's very good from a credit perspective. Valuation, well, it's a pretty transparent market. Sure, there will be differences between exchanges, but you have a price of Bitcoin that you can attest at every one point in time. The correlation, if we're talking about real world assets, where I'm focused on, Bitcoin has very limited fundamental correlation to lending to real estate, lending to companies. There's nothing to do with them. Really long term, Bitcoin is correlated with M2 or liquidity and the adoption. That's nothing to do if I focus to lending to a building right here. So those are really good attributes if you start considering how to enhance traditional credit with Bitcoin. So Bitcoin enhanced credit. So what are we doing? This is an idea. It's not just for me, but this is an idea that you all can start thinking about and integrate it into your various digital assets, but also real world activities. Start fusing collateral. Let's take a building, let's fuse it with Bitcoin. Let's take a car loan, let's fuse it with Bitcoin. Let's take a more traditional single family home and let's fuse it with Bitcoin. Why is that a good thing? Well, a traditional asset like a building, you have underwritable cash flow. They have tenants. Maybe it's multifamily, maybe it's office. You can underwrite it from a traditional perspective. And then the Bitcoin. Why is the Bitcoin good? It enhances liquidity and hopefully over the long term, it will appreciate. So your overall collateral package grows instead of depreciate or have more cost of carrying the asset. That's really good attributes from a credit perspective. So we are fortifying our lending by fusing two assets that normally don't come together. So how is this benefiting? Not just the risk perspective, but if you start thinking big picture, what can Bitcoin do? You can actually reduce the cost of funds, meaning the cost of borrowing can come down. That is good. We can also think about the risk side that I emphasized a bit. If we have more collateral and that collateral is growing and it happens to be partially liquid, that can really support what will likely go wrong in credit. Credit is negatively asymmetric. You have to prepare when things go wrong. Particularly most things in the world have a sensitivity to macro, sensitivity to specific things. If we can withstand more things going wrong, that is a superior credit instrument. By having illiquid, but has underwritable cash flows, and liquid and appreciating, that is a stronger credit. So, bringing it all together, why this matters. Affordability. Here in this country, there is a lot of need to manage and tackle inflation. If we can lower interest rates, we can really push through a lot of positive social good. Think about the mortgage market right now. A lot of people are locked out of buying a home. Why? Because mortgages are too high. But if we introduce the tool of Bitcoin, we can lower interest rates by 100, 200 basis points. That's big, that's massive. Recent products have failed. The recent innovation, if a company will go and name, it goes the other way. They raise interest rates. That's not where we should be going. Second is access. I don't want to focus in the areas that shouldn't get credit, but there are borrowers to fit a certain cohort that are not traditionally underwritable. If we have more collateral, we can actually bank them. We can provide them credit. So not marginal borrowers, but there is certainly cohorts of people that don't fit. Again, going back to the single family space in the US, post GFC, there's a lot of cracks. You might be a very wealthy real estate sponsor that doesn't fit the TLAC criteria. So it might not be bankable. But through having more collateral, you actually can now bank them. That's great. Innovation. Once you have a new tool, you can go crazy with it. Think about all the things that happen in capital markets. Not only securitization, risk trenching, derivatives, there's so much liquidity and capital that can be attracted to the space and generate different utility for different players. From the banks to capital markets to asset owners, there's a lot of innovation that will benefit the overall ecosystem by thinking beyond just not traditional tools. And last, resiliency. We're at a point in time where I think we can generally say it's a risk-on environment, even though what has happened in the last 6 weeks. But there's a lot of clouds on the horizon, a lot. From the disruption that we're seeing to the geopolitics, there's a lot of things that will likely go right, but also a lot of volatility you need to manage. I think having more resilient credit, it needs to be a recipe. Those credit drivers that I mentioned earlier, leverage, wicked underwriting, are really exhausted. So having a more resilient credit is something that we should all be aspiring to do. So, thank you for the time. And I hope we talk about a lot of products. And I hope Bitcoin is the next.